Yeah.
Order filled, check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
How you guys doing? I'm Andy with Mighty Soldiers Trades, and today we have a really special guest with us. We have Anne Marie Baiynd, and I'm just going to go ahead and bring you in here, Anne Marie. Good morning. How are you?
Good morning. It's a great Saturday in Florida. I don't know if you noticed, the weather is so nice right now. It is just fantastic. The low 70s, and if it could be like this all year instead of the summer months where I feel like I'm wrapped in a wet wool blanket, it would be awesome.
Yes, so basically we skipped winter for the first time. We're from the Metro Detroit area.
Oh, I lived in Michigan for 4.5 years. I love Michigan. Yeah.
It's gorgeous. The water, I mean, everywhere you go, there's something amazing.
Love it. So you missed winter.
Yeah, we skipped, not missed, we skipped. We purposely did this. And I don't think we're ever going back to winter except for maybe vacationing to it. It's one of those things that you want to visit. I'll miss everything, like the quiet, the silence from the snow. It's so beautiful.
It is.
And me, I'm a person that always gets into my Jeep, my car, whatever I can. Even if it's a car that shouldn't be driving in that kind of snow, I do it anyways.
Yeah.
Just because I can't stop myself.
I'm the same way. Yeah.
My mom says, "Don't do that. That's dangerous." You know. I'm like, this is what it's for.
I'll go slow. Really, I'll be fine. Yeah, I'm one of those crazies that loves the winter. I could live in the winter for 11 months out of the year. I just love those mornings you get up, it's 20 below, you go outside, you're not sure it's that cold, and you take a deep breath and your nostrils freeze together. That's sort of, intense. Love it.
Yeah, that's the thing that some people just, I'm not even going to go into it, but yeah, it freezes up in there. You know that it's the cold morning when it freezes, and you're like, okay, this one's really cold today. But I didn't realize that it was 70 degrees. I know we're talking a lot about, not trading, but it doesn't matter to me. I'm good with it. I didn't know that it was like 70 degrees the whole winter here. I didn't realize that every single day you wake up and it's 70 degrees. Yeah. And we got the blind trader in the chat here, Mike, and he's always asking me how it is in Florida, and I tell him, he's like, just rub it in.
Oh, yeah.
Good morning, Mike. So, Anne Marie, if we could start with, tell us a little bit about yourself, as maybe how you came to trading. What was it that brought you to trading initially, anyways? If you have something there.
So I really like hard things, but I didn't think trading was going to be hard. So I'll that's probably why I stayed with trading. But I just wanted to do something different. And I had been in the recruiting business. I'd had a recruiting company for a while. And a lot of times they have those success things that your people get to go to, and they send tickets, and they're like, oh yeah, we want to see investment stuff. And I ended up at one of those with some folks, and I saw a guy with a company that was purchased by, who were they purchased by? TD Ameritrade or Thinkorswim or one of those companies. And he was talking about technical analysis. And I thought to myself, how easy is this? Because I was a math major, right? And so I was looking like, come on, this is going to be a piece of cake. And it wasn't a piece of cake. It was a lot like a cow pie, to be honest. It was just really, really hard. And so I struggled for a number of years, but, it never got old. I got discouraged, but I just kept coming back because I love the markets. And the market is a complete blend of creative and concrete skills. You have to be creative enough to think about being outside of the box and looking at something and thinking, well, everyone thinks this, but what if it's not? What if it's something completely different? And then it has all the anchors of, hey, this is a lane that people normally drive in. And so it was a little bit like statistics. And so I just loved all of it. I loved looking at the people in the markets. And then I began to realize that the candlesticks were just really expressing their emotions. And I just fell in love with it. And I just have gotten up every day, sometimes very tired, but always excited to sit at my desk and see what the market has for me. And that love of the work has really been a great reward, and it's helped me over the many humps that we have as traders.
Well, for me, when I first started this, I was just Forex trading out of the military. I got hurt and I got sent to Garrison, and this was the worst thing for me. I thought I was going from high speed to no speed. Turns out there was this this civilian contractor who taught me about computers, how to like work networking and stuff internally, and also how to build computers. So I ended up at home in my apartment, my first apartment. It was amazing to be away from your parents and be on your own. And I started downloading all this software, working with it, building it, and I got to Forex trading. And they had this paper trading thing. I was like, wow, how cool is this? I can trade without having any money and learn about, how all this works. And I really didn't learn. I mean, I learned how to put together a platform, and I learned that there's all this free news. I was surprised. I'm like, why are they giving all this these powerful tools for free? But they were. And when I finally started putting on trades every single day, which has been, I don't know, well over 4 years, maybe somewhere in that I've been putting on trades every single day, day trading. And it was a big surprise to me, a big shock to me that it was not what I thought. I thought that first of all, I think I had this gambler mentality that like, I'm going to hit one day, that one of these have to hit. They don't have to hit. None of them have to hit. Ever. So, I mean, did you have a problem? Did you have a time when you were dealing with the gambler mentality that you had to break through that?
But what I did was lie to myself about it, right? And so we go, oh no, I'm not really gambling, right? And so the first thing that everybody in the world thinks is if you're a day trader or you're very active in the market, that somehow you're a gambler. So people would ask what I did, and I would say, I work in the market, and somebody in my family would go, oh, she's a day trader. And so, yeah, that was kind of tough. And we really are trying to time the market. But because our skills are limited, we end up treating it like a slot machine. Okay, this next one's going to be the winner. This next one's going to be the winner. And you don't stop to learn the mistakes. And like any performance environment, which this is a performance sport, no doubt about it, but every performance environment requires a set of legitimate protocol that you go through every day and every moment at your point of interaction, whether you're a basketball player, football player, baseball player. As we get into baseball season, I love baseball. And, the pitcher doesn't get up there and go, you know what, I think I'm going to try it this way, right? He's got 5 pitches if he's lucky, 3 pitches if he's good, and he's going to rotate. He's going to rotate between that, whatever he's good at, and an off speed. And so his mechanics are very fluid and very systematic. And a lot of times when we get to trading, the barrier to entry is non-existent. So anybody can get up there. Just anybody can't get on the mound of an MLB team. And so there are a lot of barriers. And so people have to end up learning that protocol and that process, where we can come in and just go, you know what, I think I'm going to wing it. And so one of the first things is realizing, listen, if you want to work in the market, what you're really trying to do is time the market. And if you talk to any investment guy who only makes money when he has your money fully invested, he or she will say time in the market beats timing the market. And for many of us, that's absolutely true because we don't have those skills. We don't have the skills. We don't have the mechanical motion of process that tells us exactly what we need to do. And so, that gambling mentality, we have to think about why we're trading. Well, you know what? I want to trade and make this great big win so I can buy an island and disappear from wherever, or I can show my friends how many cars I have, or this great big yacht that I've decided to buy, or whatever. A lot of us are very motivated by things that we think we want because it'll make us happy. But, as you and I know, joy comes from inside, not outside. And so, that's really the key thing. And so I had to get out of that gambling mentality to realize I was just pulling that slot and start learning some things.
Well, for me, it's it's a battle dealing with that every single day, and not only in trading but in anything in life. Whenever we invest in any type of business, there's a risk involved.
Always.
And what we're doing here, and what I heard you say about the baseball is, probability. And so it's where do we have the higher probability of success versus just go ahead and pulling that lever and not knowing what's going to show up next. And for me, just basically, I was just pulling the lever wherever I could. But my thing was I wanted to see how it was working. I wanted to see behind the scenes. I really wanted to understand, like, oh, I know this is happening, but I can't prove it. So I wanted to keep doing it until I could prove, okay, that's happening, and then once I realize and grow up to where, okay, yeah, kind of what you thought the market was and the shenanigans is there, but also what all the wise people were saying, they were also true, teaching you where you needed to be. That way you don't even have to look at that and worry about that. Because if you're focused in all that drama, I don't think you can be clear-headed and move forward in trading,
That's exactly right. And so when you know that that's sort of something that you're thinking about and you like understanding those whys about what's happening, what do you do in the morning that makes you go, okay, you want to know why, but sometimes why doesn't really matter. So how do you keep yourself between those rails? Do you have a process that you go by?
Well, absolutely. For me, it was really simple. I had to, if I'm gonna play in the freeway, I have to have some sort of risk management. I got to make sure I'm not going to get hit. And in trading, you're going to get hit. So it's not really the same. The analogy doesn't work so well, but you're going to get hit no matter what. Mm-hmm. So what I had to do is, position size. And as long as you're feeling the market when you're putting on these trades, I put only limit orders. So I feel the price, I feel what's happening. I think a market order, if you're going more longer term, not day trade, not really quick, sure, that's fine. But if you're really trying to day trade and get in and out quick on these plays, I think that limit orders are the only way to go. Not to mention, a long time ago, I had a situation where I got filled way above price. It seemed to me one tick came back down. Turns out it was like probably about 25, orders went through there. But for me, it was boom up here, got filled back down here, losing 371, and then it just continues to 500. And I'm like, should I close it? Should I close it? Should I close it?
Right. The deer in the headlights. Fight, flight, or freeze. Right. Those are the things the 3 F's that beat us. And we are in a battle with ourselves every day in the market. That's really, it's tough. We're talking about some things that are pretty complex, like feeling the market. Most of us that are younger don't even know what that, and I'm younger, I mean younger in the market. When I was 4 years in, I couldn't feel the market. And I think I couldn't feel the market because I began with, the person that thinks they're the smartest person in the room and is really interested in you knowing that. That was me. So I came to the market with an ego that needed to get pounded. And the market accomplished its goal, right?
Well, market will accommodate with that.
Oh,
yeah.
yes. I learned, but it took a long time. And it was because I did not know what it meant to feel. And that feel, in my mind, comes from watching the environment and seeing where those candles are going in short order. So, for instance, if you are looking at something and you see that price is not heading lower, but it's also not heading higher, it might wick higher and scare you. It might wick lower and scare you. But in essence, it's sitting in a range. I've learned that gives me a feel because I can't, I'm on the autism spectrum. And so words tend to slip away from me very quickly when I get anxious. And so when I could see range and I realized I couldn't trust my feelings, because what happened to me was that I would sort of mentally shut down. I went into freeze almost immediately if I saw something happening that I didn't expect. And so what I learned to do was say, okay, if I'm right about feeling or what I think the market might do, they're not going to go past this edge. And if they do, they're going to immediately rebound, or I'm wrong. They're not going to go past this edge up high or immediately break, or I'm wrong. Then that feel tells me, okay, I'm going to watch them come in here, and then I'm going to take an order, which puts many of my orders at market, unless I'm working in the weekly option space. And because, listen, if there's a space that's got a boatload of cash sitting there for you to pick up in small pieces every day, it is the weekly options market. It's because people don't know how to work in the weekly options. And I only trade SPY, the Qs, and the IWM. That's all I touch because of the liquidity, right? And with the lack of liquidity, we get that wide tick spread for fill versus ask. You think you're getting in at some space, and it brings you in a little bit lower, but obviously limit order is the best way to go in there. I love that space. It is a cash cow, but you better know what you're doing, because erosion is incredible. If it works against you, it's incredibly bad. If it works for you, it's incredibly good. And those days where we've had the volatility in the markets like we've had lately, it's just been an excellent place. It's been an excellent place to move well and to get in and out with, 30 to 50% profit. It's really, if you're not greedy, it's a great place to go.
That's incredible. One of the things that I'm doing lately, I'm trading a lot more like the SPYs, the Qs, and stuff like that. But I'm looking to profit in both directions. So you see these range bound, like let's call it a rectangle, and you see that we busted an upper shadow out of this rectangle, and we just pulled back in. So you're instantly going to be either buying puts, selling calls, maybe both at the same time. How exactly are you making sure that if it does turn around and starts to continue to break out, how did you manage that initial entry?
Okay, so that is a great question. The number one thing to realize is that most options expire worthless. More than 70% of all options that are bought or sold will expire worthless. And so the guy who's the market maker on the other side, he doesn't care because he's making money on the spread, right? He's the in-between guy. So what I like to do is I always assume, because the market's beaten me to a pulp so many times, I keep getting up and I go, all right, I'm ready this time. And what I do is I sell iron condors. And so I will look at the broad market. I'll go back on the daily range. I'll go back on a 4-hour, but I don't get any tighter than that. And I don't do synthetics because of the common fact, hey, listen, these options, 72 to 78%, depending on the month, they expire worthless. And so I'm going to go on that space and I'm going to sell. And so selling gives me less reward, but a higher probability of reward. So it all falls down into the math of what's the expected outcome. So for instance, on Thursday, I said, you know what? Let's sell the 450 calls and let's buy the 455 calls, short call spread, and let's sell the what did we sell? 445, 440 puts. And so Friday morning, I did it on Thursday because I figured the range would be somewhere sideways. It gave us about $1.50, right? Out of $5. But the probability of that iron condor expiring in the money, the delta was 8. And so that for those of us that are a little light on that, I have an 8% probability chance of being on the wrong side of this trade and a 92% probability chance of being on the right side of the trade. Granted, if I'm on the wrong side, I lose more, but I can triage my way out of that most of the time and not end up fully down. So I sold that spread, and the next morning, the volatility just dropped right out of it, even though the SPY was printing 451.80 in the pre-market. I was looking at it going, all right, what am I going to do to fix this? But I knew that my VWAP was sideways. I knew that the liquidity was sideways and low in terms of broad market action. I knew I had no real catalysts coming. I'm like, these guys are just trading the range. And so that's what I'm going to do. And it came in and it dropped. It fell right out. And we got 30% and then 50%. We got out within an hour and a half of the day beginning. I said, listen, don't wait for these things to go to zero. I talk to people all the time. They go, you know what? I'm going to sell puts and I'm not buying it back until it's a nickel. I'm like, well, good for you. I am going to take my money when I see it sitting on the ground, and I'm not going to be greedy. I am not going to be greedy. Sometimes that makes me get out early. I have guys I work with all the time that go, man, you get out early all the time. And I say, hey, I'd rather be early than late. But truly, if I'm selling an option, I'd rather be early than late.
See, I don't mind getting out early. I mean, profit is profit.
Exactly.
As long as I'm not continuing to keep that high amount of risk, but then I'm shrinking my profit, in that case, it's not going to work out in my favor. So I have to have some sort of I'm looking to get 2 to 1, 5 to 1, whatever it might be.
Yeah.
And it doesn't necessarily have to work out like that. That would be more like my swing trades or something more longer term. But on a day trade, I just want to take pieces. Like, let's say that I want to do 20 trades in a day and I want to get $100. So if I'm trying to get $100 on 20 trades, that's pretty easy, especially if you have some sort of win rate. Win rate generally doesn't matter, but in this case, this is where a win rate does matter, because if you're over 50%, and you're going to leave with something at the end of the day, as long as you're maintaining and managing that risk.
Yeah, and that really is key. A lot of folks come in and they go, I want to turn my $2,000 account into $5,000 and I want to do it in a month. Listen, people do that. There are meme stocks. There are penny trade stocks. There are all kinds of things where that could happen. However, it's much more unlikely than likely. And what's more likely is that you take risks that you can't stomach because you're watching your money erode. And again, we go into fight, flight, or freeze. And most of us go, oh, I got to get out. Or most of us will either go, I got to get out, and we get out too early, or we wait too long and we get out too late. And that really is because we're not committed to process. And one of the number one things that we have to do is manage risk in a process environment. We can't just go, hey, I'm just going to keep going until. I used to trade 20 times a day. Now I trade, if I'm trading the futures, which is, my absolute love. I love trading the futures. So much leverage, so much opportunity. But it's a scary place if you don't know what you're doing. Maybe 6 trades a day. And I'll take 1 or 2 option trades. And I'll take them in the morning. And, if I'm short and I feel like the market, there's that feel word again, I can see that the market is sitting where I believe it ought to sit. I'm going to let that go until about 2 o'clock, and then theta erosion takes care of everything, and I'm out by that 2 o'clock time frame. It's just there's a lot of risk in the market no matter what we do, and I wish risk was more exciting to talk about, but it's very boring to talk about manage your risk. And so if the number one thing I could say is the reason Andy and I are sitting here today is because we learned to manage our risk, that's really the big thing to learn, because most people will run out of money before they learn how to trade. They really will, because there's enough to know. And when we sit down and we watch CNBC or Bloomberg or whatever we watch, and they say things and have giant interviews with these very wealthy people that talk about the market, remember, their pockets are very, very deep, very deep. And they are talking about things that will make people come invest with them over the long haul. That's got little or nothing to do with you and me trying to time the market. What they are trying to do is get people to put time in the market, and they can manage their funds. And we really have got to sort of realize that what we see on television and what we have to do at our desks are 2 completely different things.
One reason why I don't do the swing for the fences thing that you were saying earlier is because I believe that the market is a minefield. And these mines come in all different shapes and forms. They can even come as a power outage in your home. It doesn't even have to do with the market at times. Sometimes it's internal in your own space. It could be family members, whatever it is. So I have to know that those things can happen, but not know what they are. So if I'm taking and I'm swinging for the fences on one big meme stock or something, and then anything goes wrong at all, it's going to destroy me.
Right.
And instead, another thing is, I think a lot of new traders, they want to they have this way that trading makes sense to them only if they reach that number. I need 5 million to live the rest of my life, or I need 3 million, or whatever it is, this number that they put out there that they need, and not to mention the cars and stuff that they need in the process. Yeah. You know what I need? I need to pay for my mortgage. Yes. I need to pay for the electric bill. Yes. I need to pay for gasoline and food. These are the only things I need. And anything beyond that, if I really want to go play with something like that, I'll set up a separate account to go play that way. Yeah. It's like the playing in the freeway I'm telling you earlier. If I'm messing around with the penny stock that is more than 90% likely to go not only back where it came from, but below where it came from.
Yes.
And over the next 3 months, lower and lower and lower from there.
Yeah.
I'm not going to go and take what I'm supposed to be paying for my life with and putting it into these things and then complaining when it doesn't work out for me because whatever went wrong. I expect something's going to go wrong.
Yeah.
You know,
I think a lot of people who end up loving trading are adrenaline junkies. And so I'm telling you, I'm an adrenaline junkie. I'll try anything outdoors except jumping out of planes and doing any bungee kind of stuff. No, I'm not doing that. But just about anything else, I'm there. And so a lot of us, when we win, when we talk about this gambling space, it is a dopamine event when things go well for us and we can get addicted to it. I mean, even the great Jesse Livermore, who really knew so much important stuff about the market, just bet too much, one time too many, and ended up broke and killed himself because he couldn't face his wife. And so what we have to realize is that the thing that brings us in, that allows us to go, oh my gosh, winning feels so good, that is a dopamine event. We are in an adrenaline space. We just have to learn to temper it and realize that we can get to a space where it begins to manage us. And the moment you find yourself hiding things from your spouse or from your family or not facing your losses, you have a problem. And it doesn't, the market will really suck you in a lot of times. And you can also begin to feel invincible, which is what happened to Jesse Livermore. He really felt, hey, listen, I know what's going on. And, you know, we don't. We do not know what's going on. There are too many. It's a Gordian knot, right? It's too big, too much, too many tentacles, and too many people with ulterior motives about what they want to accomplish. And so when you get to that space, you know, trading, you got to think about why. I did it to be free. I've always worked for myself. Well, that's not true. I worked for a few folks for a few years when I first started out, but I simply cannot work for anybody else. My husband says I'm unemployable, but that's okay. I'm okay with putting the weight on my back and going, okay, I can carry this. If it's to be, it's up to me. And I'm okay with that responsibility. I'm okay with that accountability. And if you get to that space and you hold yourself accountable and you don't hide from your losses and you come back to them and go, how did this trade go wrong? What can I do the next time in this exact environment where this trade would have performed better? Does it mean I don't take it? Or does it mean I take it, but I get out when I see this? And these are the anchors that we really have to start holding ourselves to. Once we get very good at market flow and feel, then we can say, you know what? I know this is not trending in the right direction, but if I leave myself exposed here and I said, this is my floor, I think it's going to recover. And just set that line in the sand that goes, you know what, you're wrong or you're right, right? And a lot of us, those boundaries are really hard because we're so willing to let ourselves off the hook. I think it takes a mind that commits to saying, you know what, you hold yourself accountable. Your losses, you got to look at yourself and go, all right, that was on me. Don't blame the market. Don't blame your system. Don't blame anything. Look at yourself and go, it's on me. and take it, own it, and then deconstruct it. And then you actually learn what the market lessons are. Because one of my favorite quotes of all time, I have no idea who said it. It is, the market is the most cruel of teachers. She gives the test first and teaches the lessons after. And for us, we've got to embrace that. And that means in my loss or in my gain, there's a lesson. And that lesson will make me better for the next time I have to trade.
Every single time that I would have a losing day, now this has nothing to do with it, but I would throw this out there, I'd give myself a steak. I would go eat a steak. I would go out and get a sub, go get something and reward myself, actually. I don't know why, but this was what I was doing. But I would always go out and walk a trail or go kayaking, canoeing, or anything like that. And I would meditate on that day, whether it was good, like you said, or bad. What can I do to better it? And what mistakes did I make that I cannot allow in this anymore? And even though I would come to this conclusion of what I need to do to fix, my next day, I would still show up the next morning with that same gambler mentality, ready to hit the same button, the same exact way I did the day before. And I'd end up walking a different trail with the same thought in my head going, okay, this is now 2 days in a row, the same exact mistake. But the point is just, that journaling, that meditation on whatever it is that we're doing, to help us better ourselves through this process. And what you said earlier about not blaming anything, even if there is something to blame, somebody to blame out there, what does that, to what end? What does that do for us if we start blaming something? It does nothing. Exactly. We can only better, you can better you, I can better me.
Yeah, exactly.
And
what's very interesting that I have discovered is when we make the same mistake over and over again, here's something interesting about the human. We will act in a way that is anchored to our true belief. So one of the problems I had in the trading space was thinking, listen, I know this is right. It didn't work out this time, but it's going to work out next time. And I had a lot of signals that really were just noise. They were not real signals of what was going on. And so when I can't even tell you how many times I've come in, oh, you're not making that mistake again tomorrow. And I'd come in and golly, same thing over and over again. And so I was reading something. I can't remember what it was, but the comment was, you act because you believe a certain thing. And whether you believe it openly or subconsciously, you got to get to that feeling and then deconstruct it. And once I said, oh, I'm doing this because I think I'm right, only this time it was just wrong. And so I have to go, maybe that's not right. Maybe what's right, I was terrible trying to pick tops. Okay. Let's think about 2007 to 2016. Picking tops, the worst thing in the world that you could possibly do, because everything just went higher. Everything just went higher. And so I just got addicted to top picking, think, you know what, this is a natural rotation. And then I realized, wait a second, you think natural rotation should come, but see, it's not coming. So you're wrong. So step back from that and go, okay, you're wrong here. If you're wrong, what is the next most obvious thing that could make you right? Well, any small dips are getting immediately bought up. So let me find a moving average that looks the best in this stock at this time, doing this way, and I'm going to sell a short put spread. And so that really became that understanding. So if you're ever working with somebody and they go, I keep doing it over and over again, unpack it with them. Say why. My sister, who is a phenomenal businesswoman, she says it takes 5 whys to get to the anchor of a problem. So you ask why 5 different times and just unpack it. You get to go, oh, well, maybe my system is not 50%. Maybe my system is actually 70% wrong and only 30% right. So I need to float on the side of probability. But that really was a turning point for me to unpack why are you making the same mistakes over and over again? Because listen, I did that for years. I mean, years. The market will already throw you a curve. But if you're always thinking a fastball's coming, you're out of luck. And so, yeah, just unpack it with your folks, and you'll discover some really great things about not only yourself, but how to tweak your strategies.
Yeah, I was always anchoring to the one, one-sided idea that I had, like you said. And when you first said that, it got me excited, because that's exactly the same for my trading. That's what's changed my trading. To now say, okay, this is my one-sided idea. Now let me go deeper down that rabbit hole and find out what my next idea is, if it does the exact opposite or something,
Exactly.
And then now, instead of planning one trade, I'm planning 3 trades in one, possibly, or even depending on what it is, it can be more.
Exactly.
And like you said, also unwinding. I don't know how you said it earlier, but when your trade goes against you, you're working it. You're unwinding whatever's going wrong. Triage, yeah. I find it a lot in that. That's the funnest time for me, because you're really deep in thought. And when you come out successful in that, and even sometimes more successful than your initial trade idea would have been to begin with, it's happened where I've had both directions go in my favor, and then I still see another opportunity happen there for another, and I'm just like, oh man, that's
yeah, it's a good feeling. It is. I'm not sure that there's a better feeling than a win in the market, because we don't know as much as the biggest hands. We don't have as much as the biggest hands. We don't execute at the speed of the biggest hands, and still we go in there and win. It's like the life of the underdog that's always winning no matter what in the day. Because even if your trade doesn't go well, what you're learning about are the people and processes in the market. Every time you exchange with the market, whether the market takes from you or you take from it, there's got to be a transaction that's deeper than just cash. And that transaction is information. What did I learn about? So for me, I didn't understand how people were using weekly options when I first sat in them. So I would watch, I'd have some losing trades, and I'd go, oh, well, that really was the pits. And so I started unpacking, charting just option flow, option price on my platform, just watching it just like a regular chart. And I could see that ebb and flow, and it started making me understand about where erosion began to sit. And so every trade, whether losing or winning, try and find some other information that it's always a win for you, because you learned something else about the flow. It might not be something dramatic. It might be, oh, you know what? Nobody trades in this time. And so if I'm looking for a chart to do something to the upside and I want to go long a weekly option, I'm going to wait until 2:30, where most of all the theta is gone, and I'm going to buy it when it's 32 cents versus 72 cents. Watch it go down to 32 cents and then see it go to 90, right? There's just that flow is absolutely, it's beautiful, but you don't get that knowledge base unless you look at the market transactionally in a level above the win or the loss.
Yeah, that is a golden nugget that I'm going to remember right there that you just shared. I Not sure exactly how much time you'd plan for today, and I know we called this finding the sweet spot. If there's any chart that you would like to show what you like on a chart, like what would really invite you to that, or if you could, and then you know what, yeah, basically just what really draws you in, like you just said, waiting for 230 after it's already worked itself out, so you're not the one getting slaughtered, basically.
Yeah. Okay. So let me show my screen. Share screen.
Yeah, for mine, for me, when I share screen, sometimes I just share window instead because my screens are
window.
sometimes a
There
problem.
we go. All right, let's start it here, and then let's just go here.
And while you're doing that, I can tell you that as far as Adrenaline Junkie, that's why I had to get rid of my Evo and my Harley, because I found that I was just getting a little too crazy. I started drifting on my Harley, and I couldn't stop myself. It just was too much fun. So I said, you know what? I'm going to park this, and I'm gonna learn how to be a little more responsible before I can ride my bike again.
Wow. Yeah, you know, I was a kid that just had a lot of, I was afraid of everything when I was little, so I couldn't even imagine going on and doing something like that. And so I forced myself when I got older. But bikes make me nervous. You know, I'm always terrified that I won't see somebody and accidentally hit them. And yeah, I'm glad you put it up. I'm glad. I'm glad you put it up for a little bit. Okay, so here is something that I think is, I'm going to address this in two ways. A trend sweet spot and an intraday sweet spot. Okay, so here we have a VWAP, right? So it's sort of an approximate, because the only way a VWAP can actually be calculated spot on is using a tick chart, but this is approximate, and we really don't care what the actual VWAP number is. We only care about the slope of the VWAP. And so if the VWAP is first downward and then turning a little bit upward, you know that essentially it's trying to break the north, but it won't do that without pulling back. It's just sort of the nature of the beast. 9 times out of 10, if it's changing direction, right? If something goes from up to down, it's going to give you a bounce somewhere in your rotation unless there's a big volume event. So the big thing about the market, and I'm going to say this in the very best way, I think people think it's offensive, but I don't think it is. Focus on the Forrest Gump trade. What's simple that makes sense? And what's simple that makes sense is something that is moving up. So what this thing is, a moving average cloud on TrendSpider. It's absolutely fantastic. And when that cloud is either red or green, it tells you you're either in a downward trend or an upward trend relative to those two moving averages. Okay, so I have a tight one. It's a 3 and a 9. You're going to be in better shape if you are a swing trader to trade in the direction of the trend of any kind of major moving average. So this trend is above the VWAP, so we've got ourselves upward motion, and you buy on any pullback relative to the last candle. Okay, so here, let's say you're looking at this and you're like, oh, that was flat. And it was flat because this was up and down, 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 this was up and down. And then finally, this was up and down. And now this broke to the down and now it's moving up, right? These are all sideways. This starts moving up. So if you say, okay, I'm here, And this is the end of the day, and you go, okay, I'm going to look to see what is happening in this chart. If you close over the close of your first candlestick that closes over that VWAP, you can take a long here. Your stop doesn't need to be any further than down here, because short-term swings are all the market can handle right now, where my crosshairs are. All right? If you're in this kind of space, notice the VWAP is sort of up, but the moving average is sort of down. And so you're in a cross current. This is why I like to sell iron condors. Cross currents, which we've had them 1, 2, 3, 4, 5, 6, 7 days in this range. So how do I pick my edges? I say, hey, this is a support zone. That's a resistance zone. I'm going to sell my 460 calls, and I'm going to sell my 455 puts. Now notice it comes into this area. It'll dip down, but then it pops right back up into that zone. You've got to look at the market where it is sitting and also look at everything else. But if you're thinking about a short-term trade, you need to pay attention to where the market is sitting in a short-term motion. It should have held this 450. Instead, it's come right into it and broken down. Now the VWAP is still up, so chances are the price will try to bounce again. But if you are sitting in a range like this and you can go, oh, this was the top, this was the bottom, then come Monday, as it opens up, assume that even if it bounces higher, it's got to resolve. So it's either going to stall out here, or if it moves up, it's going to pull back here. If we begin the week and it fades, now we know, all right, we're going back to the bottom of the band, but the whole thing is sideways. Don't try to trade something that is upward. Don't try to trade in one direction if your candlesticks are doing this on a daily, right? You trade sideways in short-term motion. That's the biggest thing. Trend is going to be like the wind at your back. If you trade in the wrong direction, it's going to be the wind in your face, right? That's going to give you a headwind. It's going to make it more difficult to trade. So sweet spots come when prices begin to trend. So we have a lot of prices that are not trending. I'll go to one that has been trending, but now is a little bit sideways. That's the energy sector. Go ahead.
So the wind is at your back and their back is up against the wall?
Well, it all depends, because you and I, listen, if we look at this over all of these days, you could be long, I could be short. We could both have the wind at our backs in completely opposite directions, and we could both still win because of the range of the market. And so it's not a one-to-one in terms of who wins or who loses. And so what I would say there is your job is to, I'll use that word that you used again when we first start talking, feel the flow. And so you can feel the flow by really vocalizing what you see. And you can vocalize what you see by simply saying the following. If I move up in the past, if I move up above 78, what has been happening to price? Well, it might hold for a day, but it collapses. If I move down below 75, what happens? Well, it normally bounces. So we have had a range here, and that range is now breaking out. So what do we know? When price begins to move nowhere, and only has time, right? If I said, all right, give me the price, let's make one candle between 75 and 78, it would hold all of these candlesticks. But now we have a break and the overall trend is upward. So this becomes a sweet spot on any pullback event. This is long action that on any pullback event, it's going to be good. So what will I do? Somebody like me, I go, you know what? I'm going to sell a short put spread down here and I'm going to let it go for a couple of weeks, right? Maybe I'll let it go for a month. Depends on how much premium is sitting in there. But what I do know is that it's upside. If it comes all the way in, I'll add to my put position. I might take a call if it comes all the way and hits that VWAP. And so the big thing to understand is what traders have a tendency to do when price does a certain thing. They try to get up over the top, but if they can't, we know we've got a short from 78 to 76. It might be that it goes to 74, but we really only know that we can take that money when it gets to 76. And so you don't want to get greedy. If you've sold a call or you've bought the put, even if it's not got the reward that you were hoping for, you have to take it off when price tells you what to do.
Well, as an impatient trader, I can tell you that is beautiful and amazing. That you're waiting to, when price gets above this, I'm waiting it out. I'm patiently letting this work itself out rather than just, oh, I need to act.
Yeah.
And
so that's another big thing. If you are impatient, which I am, right? I'm terribly impatient. And you go, you know what? I don't like that. I want to trade something tighter. Here's the beauty of the market. This is a range formation that they have. Once you figure out, hey, what do I want to do here? This is an opening range event. I got to tell you, it's one of the most important things you can look at. Look at the opening tick. Watch the slope of the moving average. Maybe it's a 10. Maybe it's the VWAP, whatever it is. But in the first 5 minutes of that, where does it open at 9:30 and what does it do? It's going to tell you what it's going to do for the rest of the day. It's either going to tell you it's moving sideways, it's going to move up, or it's going to move down. You go, well, thanks, Captain Obvious. But it will tell you physically, listen, if you think this is a short, you're wrong. Why? You're under the VWAP. The VWAP is under you, giving you support. The opening tick is under you, giving you support. And a moving average ribbon or whatever tells you you're upside. The biggest battles happen at the opening tick. And it's because there's still guys and gals with tons of money that call somebody up and go, listen, I want you to buy it every time it hits this bid, and I want you to buy X at the opening tick. So The opening tick, what it starts at 9:30, watch the first 5 minutes, see if you're above that range, and listen, it will take you where you need to go from an upside perspective. And the same thing happens. Notice sideways, the average is moving up. You're above the VWAP, above the opening tick. See how it moves sideways and then it breaks? A chart that moves sideways in an upward pattern will continue into the next line of resistance. Same thing for a downward formation. Those are literally the things that I look at every single morning, every single time. That is my sweet spot.
That's amazing. So price relative to the moving average, price relative to the VWAP, and one that I don't think about as much is price relative to the opening tick.
Oh, yeah. It is golden. In the first 5 minutes, you'll see the play that is in the range in terms of, hey, listen, I'm willing to risk yesterday's low to bounce. I'm willing to risk yesterday's high to fade. And then once they settle out, you know what you're doing. I mean, literally, if you go to a 5-minute, I don't like to go to very small time frames. It's just not my thing. I get chopped around too much. I like watching for the big thing, but take a look at this. Here is the opening tick right down here. Immediately, it shoots up on that first 5 minutes. So your thought is, okay, buyers at play. Sellers obviously are going to try and come in. Let's see how they hold the VWAP. Again, look at how much time you have to wait. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 5-minute candles. It's 10:35 before you go, you know what? I'm good to go here because it's come back. It's given me a pullback that holds. So now I know where my floor is. Hey, if it loses 78.20, I'm out of here. That has my whole pattern changed. So I have defined risk. And then it tells me, all right, once I get above the VWAP and I get above my tight moving average, I've got a 3 and a 9 here, right? So that is very tight. If I had something like, let's do a 5, let's do the 5 and the 9, right? You'll see it slip over just a little bit more in terms of the crossover. It doesn't really tell you it's safe until right about here when you get back up over that 5, but it's free sailing there. And obviously you have to see that you're waiting it out here on that edge, but it is golden. And I'm going to tell you, if somebody goes, what's your secret about trading intraday? That's it right there. I got nothing else on it. That's it right there. All of it.
Well, this is beautiful, Anne Marie. Thank you so much. I really appreciate you joining us. It's
my pleasure. It was my pleasure. Loved it.
It's been a lot of fun. But I would like to ask you if you would have time sometime to come on for a shorter episode, just to let people know the mechanics of something that you've really enjoyed.
Of course.
Whether it be the iron condor or whatever it is.
Yeah, absolutely.
What are the moving parts, and how does that work under the hood?
Yeah, absolutely. Absolutely.
Simplest way that we possibly can.
What might be fun is maybe while I'm trading it, I'll take some snapshots so that when we do talk, I'll have, okay, this was happening, and then this was happening, and then this was happening, so people could see what to work on.
Yeah. That would be amazing. It would be a lot of fun to see, because I mean, I know a lot of new traders. When they hear some of these things, it's just like nothing.
Yeah.
That's when they start to fade away, and then they realize they're fading away. They try to come back, but there's nothing to grab onto.
Yeah.
And they're trying so hard. So if we can just have a companion to this, that maybe we can show.
Absolutely. That would be great.
That would be amazing. But thank you so much, Anne Marie.
My pleasure, Andy. My pleasure.
But I look forward to seeing you next time. Thank you.
Yeah. Take care. Bye-bye.
Bye.
Yeah.
Ordered filled. Check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like,
If you with the squad, then you already know what's up. It be going down, but my account is going up. I'm about to make another 100,000 bucks. Rolling up that chain, I'm about to take another puff.
Hold up, I made a killing, now my pockets got swollen. Independent, now I'm taking over. I'm a lot richer, you a lot broker. I'm a pot smoker, stockbroker, blowing up like a supernova. On my mind, I was born a soldier, the best in the game, man. I thought I told you. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like, I am unstoppable, I can do anything I ever wanted to. Never did anything they ever wanted me to. Got on my side and I'm not gonna lose and they're not gonna win. I see them, the haters, it's all cause I'm getting dollars again. Commas on commas on commas, I'm buying the dip. The market is dropping again. I can see him hating from the sideline. If you see a hater, tell him bye-bye. Watch my money grow, 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 grow. And my wifey like, whoa, 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 whoa. Whoa! Somebody better stop me cause there ain't no competition and I'm coming for the top position. Obliterating the opposition every time that I jot it in the composition. Everybody wanna stop and listen cause I bring it to you hotter than the oven in your mama kitchen. I'll be getting hit like a politician. I'ma get bread when you stack looking taller than Scottie Pippen. Ain't nobody ready for the Armageddon when I pop the clip and I ain't playing. I'm spraying you brain, I'm bringing the pain like Damon Wayne. You disappear like David Blaine. I'm dropping bombs, Saddam Hussein. Stop and aim, pop you lames and pop champagne. I ain't playing so stop the games, you know the name. If you wanna take it to the streets, let's get it. If you wanna take it to the booth, let's get it. I'm about to take it to the top, let's get it. We ain't never ever gonna stop, let's get it. You ain't never heard nobody spit like this. Call the paramedics when I get like this. Front page news when I wreck like this. Hop in the booth and I wreck that shit like